Opendoor stock has been on one of the wildest rides we've seen all year. After Thursday's regular session where shares surged nearly 80%, closing at $10.52, the stock cooled off in the aftermarket, giving back 53 cents, or about 5%. And you know what? That doesn't surprise me one bit. Whenever a stock has a move of that magnitude, you can expect some profit-taking. Traders who rode the wave up from $5 or $6 into double digits were bound to lock in some gains. That's natural, and it doesn't change the bigger picture. In fact, I'd argue that a little bit of profit-taking here is healthy. It's the market taking a breath after a record-setting run. But here's the part that matters. While shorts may look at the 5% pullback as an opening, the reality is that the pressure on them has never been greater. This isn't just about whether the stock opens Friday in the red or green. This is about the fact that shorts are now staring down a completely different company than the one they bet against. Because with Keith Rabois, Eric Wu, and Kaz Nejatian at the helm, Opendoor is not the same story anymore. It's a company with restored vision, restored leadership, and restored conviction. So today, as we head into the Friday pre-market, let's break down what's really going on. We'll talk about why Thursday's aftermarket pullback is not a sign of weakness, why shorts are on the ropes, how leadership has reset the story, and why Eric Jackson now believes this is a $50 stock, and why that may come sooner than anyone thought. Let's start with the pullback. After a day where the stock ripped higher by nearly 80%, a 5% giveback is nothing. That's price discovery. That's consolidation. And more importantly, that's part of the natural rhythm of markets. Nothing moves in a straight line, especially not after a parabolic rally. So yes, we may see a little more of that in early Friday trading. Some traders will lock in profits, some shorts will probe, and the chart may dip a little. But as long as the conviction remains, as long as the story hasn't changed, and it hasn't, then dips are simply opportunities. And conviction is stronger than ever. Just think about what we've seen this week. Kaz Nejatian, former COO of Shopify, stepping in as CEO. Keith Rabois returning as chairman of the board. Eric Wu back on the board as well, and alongside Khosla Ventures, putting $40 million of fresh equity capital into the company. This is not business as usual. This is a complete reset of leadership and vision. That's why Thursday's rally happened in the first place. Investors aren't just chasing momentum here, they're responding to a fundamental change in governance. They're responding to the return of founder DNA. They're responding to an AI-native CEO who understands how to scale platforms and build generational companies. That's why the stock didn't just pop and fade. That's why it closed the day up nearly 80%. And this is exactly what activist Eric Jackson has been fighting for all along. For weeks, he's been camping outside Drake's house, running social campaigns, speaking on national media, pushing the message that Opendoor needed stronger leadership, founder vision, and a clear mission. And now, that mission has been delivered. The board listened. The founders are back. The CEO is in place. And the $40 million investment proves that insiders aren't just talking, they're putting their money where their mouth is. So when Eric Jackson says that with the board picks accomplished, this is easily a $50 stock, that's not just a throwaway line. That's a thesis built on conviction. And what's more, the path to that target may now be faster than expected. Why? Because shorts are trapped. Let's talk about that. As of last week, roughly 24% of Opendoor's float was sold short. That's 155 million shares betting against the company. Those shorts were counting on weak leadership, poor governance, and uncertainty. They were counting on Opendoor to drift without direction, to bleed value, and to eventually collapse under its own weight. But now, all of that has changed. Instead of weakness, they're facing strength. Instead of drift, they're facing clarity. Instead of uncertainty, they're facing conviction. That's why the aftermarket pullback doesn't matter. Because even if the stock gives back a little more on Friday morning, the bigger dynamic is that shorts are under immense pressure to cover. They're facing a stock that's not just higher, but fundamentally stronger. They're facing a company with fresh leadership, fresh capital, and fresh conviction. And that means every dip is an opportunity for longs to buy more, every bounce is more painful for shorts, and every day that conviction holds makes it harder for shorts to stay in their positions. And here's where the vision comes in. Because this isn't just about a board reshuffle or a short squeeze. This is about redefining real estate. This is about Keith Rabois and Eric Wu reminding the world why they started Opendoor in the first place, to simplify the process of buying and selling homes, to use technology to remove friction, and to unlock value in one of the largest markets on Earth. And with Kaz Nejatian at the helm, that mission is now infused with an AI-first mindset. Kaz has already made it clear in his first statement as CEO that home ownership isn't just about houses. It's about families, communities, and societies. It's about stability and opportunity. It's about creating a generational company that makes ownership more accessible, more affordable, and more efficient. That's a vision that investors can rally behind. That's a vision that makes shorts nervous. Because you can't bet against conviction like that forever. So here's how I see Friday playing out. We may see some early selling pressure. That's normal after a big run. But if conviction holds, and all signs point to it holding, then that pressure will be met with buyers. And once momentum builds again, it could carry into the close, into Monday, and into next week. And don't forget, next week we have the Federal Reserve meeting, with a strong chance of a rate cut. That's another tailwind for Opendoor. Lower mortgage rates mean more affordability, more transactions, and more demand for Opendoor's platform. Layer that onto the leadership reset and the short squeeze dynamic, and you've got the perfect setup for continued momentum. And let's be honest, this is exactly how cult stocks trade. They don't move in straight lines, they move in waves. They rally hard, consolidate, then rally again. They climb walls of worry, they shake out weak hands, and they reward conviction. That's what we saw on Thursday, and that's what we're likely to see going forward. So to wrap this up, Thursday's aftermarket pullback is not weakness, it's consolidation. Shorts may see it as an opening, but in reality, they're the ones on the ropes. Leadership has been restored, vision has been reset, and conviction is stronger than ever. Eric Jackson's $50 thesis is now more credible than ever, and with shorts under pressure to cover, that target may come sooner than anyone thought. Friday isn't about guessing every tick. It's about recognizing that Opendoor has entered a new chapter. A chapter where dips are opportunities, where conviction matters more than charts, and where shorts are no longer in control. With Kaz, Rabois, Wu, and the Open Army driving the story, this stock isn't just moving, it's transforming. And that transformation is why I remain bullish heading into the Friday pre-market.